Hello and welcome to NDTV Profit. I am Vikas Shrivastav, your host. We have with us Mr. Amit Jain, the global CEO of Sterling and Wilson Renewable Energy Limited. Mr. Jain will talk to us about the company's business strategies as well as their progress after the third quarter results, as well as their plans going ahead. Welcome to NDTV Profit, Mr. Jain.
Hi. Thank you for having me over.
Right. Since I will start with asking a question which is latest development, since you are a major player in the solar sector, this government has announced that they will reimpose ALMM from April 1. So what will be its impact on Sterling and Wilson and overall on the industry going ahead?
So I would say there would be no impact of this policy on Sterling and Wilson because we are a pure play solar EPC company, and the Indian market is predominantly BOS market. What does that mean is the module supply is in the scope of the clients or the owner most of the times, and in addition to that, so significant capacity addition in space of module manufacturing is happening in India. So we are not impacted by that, and now to execute the projects in India, sufficient capacity of the modules are available. And this reimposition of ALM, which has happened yesterday, so they have given a relaxation for the projects which are in advanced stage of manufacturing or which are going to place orders by March. They can still import the modules. But we foresee no impact on EPC business going forward due to reimpositions of ALM, as sufficient capacities are available in India, and project rollout will continue to happen as it is happening. It will continue to gather momentum as predicted.
Okay. So I was talking to some of the industry experts, and they told me that especially when imports are still feasible, even if we apply this 40% of BCD, we still see that a lot of players or developers find that imports to be more viable and feasible compared to using the domestic panels which are available in India right now.
So that depends, but a lot of projects we participate in the PSU projects, and depends on which particular scheme the project is coming under. So a lot of the projects there, it's mandatory to use the modules as per the ALM notifications. So it means rather than even after paying the import duties, you cannot import the modules and you have to go with the domestic manufacturing. So if there are some of the project with the open access categories which may be falling beyond the purview of ALM, they can go ahead with the import of the modules. But most of the public sector tenders where we participate fall under ALM requirements, and for those we'll procure modules if they are in our scope from Indian suppliers. So Indian suppliers, I believe that in times to come they will also be very, very competitive, and we don't foresee any problem on that front.
Okay, so basically what you are saying is that those projects which are falling under open access, captive and group captive, they might still look at importing panels from abroad, whereas those projects
Absolutely.
which are catering to government, they might not. Okay. So recently we all got to know that you all have got an international order also, as well as your Nigeria order is also looking very fruitful. So what is the say on that, and what is your current order book position?
So as on 15th of January, our unexecuted order value was 8,750 crores, and more than 90% of this particular order value comes from domestic projects. So this is after a gap of 3 years that we have picked up an international projects, which is in Spain, 220 megawatt, given by Plentitude, which is the arm of ENI, which is National Oil Company of Italy, and one of the biggest renewable energy producers in Europe. And as far as Nigeria project is concerned, we signed the MOU, the contract discussions are in advanced stage, and we expect it to conclude soon with the Nigerian government.
Okay. This Nigerian order, the project size is close to $1.2 billion, if I am not mistaken. So what would be your portion out of that?
So the project is a development and EPC project. It has been developed by our partner Sun Africa from USA, and we'll be doing out the complete EPC and O&M part of the project. So majority of the order, like 85%, more than 85% of the order value will be in scope of Sterling and Wilson.
Okay. And also, how do you see this international order book going ahead? Do you see that high margin domestic orders would continue to be the focus, or would you also be looking at international orders also?
So I would like to say that the international Indian story is shaping up in a big way. So earlier our majority of the revenue, like say 66% used to be international revenue and 33% used to be domestic. But I expect in the way Indian story is shaping up, it's likely to reverse. Our major focus is going to capitalize on the Indian story, and we see the capacity addition of 30 gigawatt plus happening every year. So this is going to be very, very attractive market, and we are likely to capitalize on that. So high value, good margin orders coming from Indian markets is going to form major part of our order book. From 65 to 70% of the orders are going to come from domestic markets. But having said that, the international markets are also exploding in big way. So our traditional stronghold markets of Middle East, Africa, Australia, they continue to be there, but we'll pick orders very, very selectively at good margins, which can contribute to our bottom lines and can help in improving our bottom lines. Because the base order book will be consolidated from Indian markets, and it will be supplemented by selective projects from international markets. So there will be focus on all the traditional geographies where we have been present, but we will be focusing far more on Indian market, because market opportunities are huge, and being a traditional, like consistently we have been market leader in India, and we have delivered huge margins in India consistently. So we'd like to focus big way on India, supplemented by the order books with good margins in international markets.
Okay. So as of now, I think your margins are close to around 11 to 12% in India. So how much it is in international orders that you execute?
Yeah. So both margins in India and abroad, both the places are 10 to 11% gross margin level. But I see in future going forward, the margins may improve in both the geographies, India as well as overseas markets.
Okay. In the third quarter, your gross profit and the gross margins both had improved. So how do you see your execution of projects happening in the fourth quarter?
Fourth quarter we'll see the better numbers. So because our balance sheet has also got significantly strengthened, and now the order book is huge. So the fourth quarter and going forward, so though I will avoid giving any forward-looking statement, but numbers are likely to improve significantly quarter by quarter.
Okay. And what is the current debt position, and how do you see it in the next couple of quarters?
So we are practically net zero. There is just 27 crores of debt, and we have no debt to repay in next 1 year. So practically, for all practical purposes, we are a debt-free company.
Okay. And so as of now, you are saying you are debt-free?
Yeah, we are debt-free company with respect and only the vendors outstanding which are there, they are in the books, but we are practically a debt-free company.
Okay. And is there any plan of raising fresh funds for any of your projects?
No, as of now, we are our business is cash positive business. So we are likely to improve our cash positions going forward. And as of now, there are no such plans. Okay. But as per the direction of we'll go by as per the direction of the board, but there are no such plans as of now.
Okay. Thank you very much, Mr. Jain, for talking to NDTV Profit. It was our pleasure talking to you.